please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. The big talking point yet again is the fact that rupee continues its free fall, plunging to record lows yet again. Today, the low was at a level of 71.37 against the dollar. In fact, it straight away opened below that 71 mark. We'd spoken to Jahangir Aziz of JP Morgan and Abhig Barua of HDFC Bank earlier today on the rupee trajectory and how India can improve its macro situation. Listen in to what they had to say.
I mean, there are two sort of separate things that are happening at the same time, right? There is the internal dynamics in India and what's happening in the external front. So if you look at, what was happening in the external front from April, let's say up to sometime around end of July, I think that was, dollar tightening or dollar appreciating, global financial conditions tightening, and I think that the emerging markets, including India, all reacted to that by letting their currencies depreciate quite a bit, do some sort of an FX intervention, but hardly any interest rate hikes. What is problematic of India is how that growth is being financed. Whatever uptick in investment that we've seen over the last couple of quarters is not getting funded domestically. It is getting funded abroad, which is why the current account deficit is widening. In a situation like this, there is no other option but to bring down the current account deficit by the old-fashioned method, which is by reducing growth.
It's very difficult to predict, some kind of a level of the rupee at this stage. We are in the middle of a crisis, and unfortunately, I think we don't seem to sort of put adequate emphasis on the fact that it is a crisis. So I think with the rupee in free fall and the consequent, impact on inflation, coupled with the fact that we have bunched up paper supply coming in, I think the possibility of yields tightening further is there. I think even if you go by, the most crude RER calculations, between 71 and 72, you're roughly close to the fair value.
Well, otherwise, things not looking good, so good for the markets. But L&T Infotech, I think you should pull up that stock. In the last 1 year, the stock has given you massive returns. Yes, today it's up 7.5%, but in the last 1 year, it's up 150%. Rima, take us through these details. The company was saying that they're going to do an OFS. Yesterday, it was for institutions. Today, it's for retail. But it seems demand is so strong because it was at a discount. But the stock is higher even today. And yesterday as well, you were telling us it was outperforming.
Yes, absolutely. So L&T Infotech is doing an OFS. So the promoters, that's L&T, the infrastructure conglomerate, is looking to sell stake in L&T Infotech because they need to comply with SEBI's mandate that a promoter cannot hold more than 75%. So yesterday was the share sale to the institutional investors, and today it's for the retail investors. Now, yesterday, from the institutional investor, the company got bid up. They saw very strong demand, nearly 3x. So what was on offer was 9.5 million shares, and they saw demands or bids from investors for 29.8 million shares, so nearly 3x. Today, it's reserved for retail investors. That's a very small portion, so just about 1 million shares. And yesterday, despite it being priced at a 6% discount, the floor price was actually at 1,700 rupees. And, the stock just ended down 1.5%. And today, look where the stock is. It's crossed the 1,900 mark. A growth for L&T Infotech has been very strong. They do not give a guidance, but they continue to maintain that they will be in the leadership quadrant even in the coming year. If you look at the stock performance, it's rallied close to 65-66% this in 2018 itself. And as Nigel pointed out, in the last 1 year, it's moved up 150%. There's clearly a lot of demand for L&T Infotech, purely going by the price action. And despite so much supply, the stock is getting bid up today.
Okay, all right, Rima, thanks so much for that. Well, let's tell you how to trade the Nifty, actually. We're now down another 20 points suddenly. We were down only around 7-8 points just a short while back. So I think Ultratech's moved lower. Grasim has moved lower as well. Both those two stocks should come up for you. And Tata Motors, the street has been really waiting for some good news coming out of there. Losing patience, actually, it seems, because every time we're seeing a bit of a bounce to 270, 272 odd, the stock comes in for some selling, moving to the low point of the day. But how do you play the Nifty from here? Ashwini Gujral and Rajat Bose are with us. Ashwini, run us through your trades as well as pick for today.
See, we started falling yesterday afternoon. Today morning that continued. Now I think, somewhere there is some sort of support that is coming in. After all, large stocks have fallen 5 to 8%. So my sense is that the second half could see a bit of recovery if, crude, etc. don't start to misbehave again. But overall, I feel that for the day, maybe 550, 560 could hold on. And similarly on the bank nifty, we could have a bit of a rally towards 27,950, 28,000. So that way, if anybody is interested, I think taking longs only intraday would be a recommendation, because the markets beyond a point are not able to fall. So maybe they need to rally first a bit and then the decline may start. Having said that, individual stocks, NBCC is a sell with a stop of 72, target of 66. JSPL is a sell with a stop of 218, target of 204. And Tech Mahindra is a buy with a stop of 758, target of 775.
Ashwini, any particular thoughts on HUL? Stock is down 8% in 2 days. What are the charts telling you?
See, very similar. I mean, these stocks, they don't generally tend to fall 8% in 2 days. So some, heavy selling has happened, and, possibly some amount of pullback may happen from the 1600, 1620 zones. But overall, the correction on these stocks could last a bit. What I'm talking of is just a pullback so that this intraday oversold position is corrected a bit.
Okay, all right. Thanks so much for that, Ashwini. Let's get in Rajat as well. Rajat, what picks do you have for us?
A couple of September futures contracts that I would suggest for trading. One is Maruti, where futures level of 8975 should be used as a stop loss, and your target could be 9120 and 9175. I'm giving these extended targets primarily because Maruti, even while the fall was happening in the morning, it was pretty strong, and it is actually showing good recovery from the lower levels. So chances are that this higher levels could be scaled up, maybe not today, but maybe tomorrow. And Titan is pretty weak. I would still say it can be sold with a stop above 910, 889 and 882 are the targets. And regarding the Nifty and the Sensex, I would say watch out for lever if it were to fall again below 1624, because that was a record volume on intraday chart. If that levels is scaled down again and it breaches and taken out decisively, then lever can even breach 1600 mark.
Flavor of the day is clearly the IT sector, and in that, the stock which is on our radar is Mindtree. It's gained close to about 3% This is a CNBC TV18 exclusive. I caught up with Ross Tharavanan, the MD and CEO of Mindtree, at their 2018 analyst meet, which was held in Mumbai yesterday, where he spoke about stronger growth in FY19, his target margin range, the troubled client in BFSI, and how the win ratio of the company has actually improved in the last 2 years, amongst many other topics. I started out by asking him whether this run rate of $300 million of deal wins that the company's enjoyed in the last 2 quarters are sustainable going ahead. Listen in.
The whole team is focused on engaging with customers, helping close deals as quickly as possible. We are also very pleasantly surprised by the strong resilience of the demand environment. So things are going well for us. But again, like I said, don't want to comment on the specific deal wins number. Part of it is, again, like I said, I don't want to give guidance.
But it's sustainable, these large deal wins.
Part of it is also the fact that deal wins are also binary, right? I mean, in last quarter, some deals did get closed. Now, I can't predict how many will get closed in this quarter, but underlying momentum is strong, the demand environment is strong, and Mindtree's pipeline is growing, and our win ratios are also growing. So that's what gives us confidence for growth for this year and even over the next few years.
So any numbers on the pipeline and win ratios, how they would compare with the prior quarters?
We don't give the pipeline numbers externally, but on win ratios, for example, in 2016, our win ratios were about 22-23%. So if I participated in $100 worth of deals, I would win about 22-23. Now it's probably become 33-34. So it's about a 10% improvement in the win ratios over the last 2 years.
And pipeline, how much higher is it this year compared to, say, last year?
Pipeline is almost, I would say, significantly higher, almost like multiples of what the pipeline used to be 2 years back, and much larger than what the pipeline used to be even last year this time.
All right. Let me come to the margin business. I know there is a big rupee tailwind, but many of the large IT companies are trading with margins of over 20%. Some of the mid-cap companies are at 13-15%. Where does Mindtree want to be?
We are conscious that our margins are below our comfort level right now. We got hurt by a few things, including the acquired entities, and the integration had its own challenges, and we are now slowly working through all of those issues right now. So for me and for the management team, improving margins is a very big priority. I would like to leave the currency effect out of this for the time being, because that is outside our control. But X of currency on an operational basis, huge effort by the management team to improve profitability. It's below our comfort level, like I said. So trying to get it back, is a big priority.
So what is Mindtree's comfort level or potential in terms of margins?
So our comfort level was in the previous cycle when the rupee was about 62-63 kind of a range. Mindtree was at 17-18% operating profit or EBITDA level. Trying to get back to that kind of margins is the focus. Now, maybe it will take me more than a year to get there, but that's the priority for the leadership team. So over the next few quarters, we expect that bottom line growth will be faster than top line growth.
Okay, but now the rupee is actually at 70, right? So shouldn't that take your like-to-like margins closer to 20% or maybe even higher?
If it does, it does. So like I said, I'm not guiding or I'm not factoring in currency. If the rupee depreciates, then any benefit we get will flow through. If the rupee appreciates, then any impact we have will also flow through. So we are keeping currency aside for a second. On an operational basis, improving margins is what the team is focused on.
Okay, big risk when it comes to Mindtree is the concentration risk. Is your growth X of the top line in line with the industry? Can it grow in line with the industry, or will it be lower?
Again, like I said, I don't want to comment with the rest of the industry. 2016-17, we had a peculiar situation where multiple of our large clients had issues in their own business. It's got nothing to do with Mindtree, neither from a delivery point of view or a relationship point of view, but peculiar factors affecting their own business then impacted them, and therefore it impacted us. I think we are largely behind those issues as of now, barring one customer. So therefore, the customers that are in our top 10 or top 20 list today, very high confidence that we can generate more growth out of them, and that's what we are working on.
Some more color. You said barring one customer. What exactly are you referring to? Which
Amongst our current large customers, one customer is still going through some business challenges in terms of, if I look at some of their recent reported numbers, management changes, etc. One customer is still, I would say, is still not completely settled down, but all the others have settled down, and some which have not likely to grow have dropped out. The ones that are likely to grow have come in.
But has the stress level increased at this particular one customer?
It's remained the same, so it has not stabilized as yet, so therefore it's difficult to predict the line or no line of sight into the short-term future with that customer. But the remaining, like I said, if I look at my top 10, 9 out of top 10 are a lot more confident with the ones that we are left with as of today. So that's the effort to mine those customers and get more growth.
Where do you foresee digital, say, in 2 years or 3 years from now?
I think it will continue to accelerate because, like you pointed out, our own pipeline plus what we are seeing from customer feedback as well, they are getting into much larger, more complex, more transformative programs. Our win ratios within that are probably even higher than the Mindtree win ratio that I spoke about there. So I think it will maintain its above Mindtree growth rate even for the next few years.
Okay, and BFSI, has it improved?
Not at the moment. I think it's still extremely choppy. The troubled customer that I spoke about is one of our BFSI relationships there. But even if you leave that client-specific issue aside, we are not seeing BFSI do as much of transformative or innovation-led work, grow the business, digital kind of work within our portfolio at the moment. That's what we are waiting and watching for there. Our BFSI portfolio seems to be still predominantly focused around efficiency reduction, sort of improvement, or regulatory kind of spends. We're not seeing that much of transformative digital initiatives right now.
All right, just keep an eye out. I think we had a couple of large trades that just took place. we should pull up, I think, Bajaj Finance. That I think there's a huge trade that's taken place out there. It's close to around 15 lakh shares. I think, no, it's more than that. It's around 28 lakh shares that have taken place. If we can get that lineup, with the large trades that just took place, that'll tell us the picture. I think our ticker team as well should alert you, because on a counter like this, when you see close to around 28.5 lakh shares changing hands, this will be a rather large value, I think. So, prima facie, I think it's around 700 crores approximately of a large trade that's taken place. So let's try to pull up, the large trade that we normally get, the large block deals. Maybe, in fact, that'll give us a picture and we could get the exact amount. For now, I can see there are two trades that have taken place. 0.5% has changed hands. One trade is of around 15 lakh shares. The second one is of around 13.75 lakh shares. So at the end of today, I think you'll have to keep this in mind, because this will be a good 700 crores. So we'll have to see who exactly are these parties, and that's what could move the DI and the FI flows as well. So just keep the stock on your radar. A very, very large trade. Our ticker team will put it out very, very shortly. Close to around 0.5% changing hands as well. I think Bajaj Finance as well, but that's not a very large trade that's taken place. Bajaj Finance, two trades. 0.5% have changed hands. The details will be up for you on the screen very, very shortly. Slip into a short break. Up next, as the Reserve Bank, I think that's the plate. Before we go into that break, that's the large trade that I'm talking about that just took place. Close to around 0.5% at around 2,707 rupees. Two trades took place. End of today, keep an eye out on that data. That's what could skew the institutional data as well. By the time we wind down. Out on IDBI Bank, actually, the stock should be in focus. The Economic Affairs Secretary is saying that LIC is likely to look at an open offer. SEBI will decide whether or not LIC's open offer for IDBI Bank should be exempted or not. And that's the reason why, in fact, the stock has taken off in the last few minutes. LIC's board approves the purchase of majority stake in IDBI Bank. Remember, just a few trading sessions ago, the fear was whether or not there'll be an open offer or not. Now, clearly, what the DEA is saying, that yes, we're going to be looking at an open offer, and SEBI can take the decision whether or not it should be exempted. And that's why from the lows of the day, actually, it's seen a bit of a bump up. We'll try to get in Sapna. Maybe we'll get you a few bites as well. But that's the commentary that just come in the last few minutes on. But moving on to our special report, Urjit Patel completes 2 years as the Reserve Bank of India Governor. Ritu Singh joins us with the timeline of his appointment and the key hits and the misses.
2 years ago, Urjit Patel took charge as the new governor of the Reserve Bank of India, marking his maiden monetary policy with a 0.25 percentage point rate cut. Now, barely 2 months in his new role, Urjit Patel faced one of his biggest tests yet, with the government announcing a note ban. Now, it was baptism by fire for the newly appointed governor. While the decision to outlaw 86% of the cash in circulation was political, fingers were pointed at RBI for the mess that followed and the amount of time taken to count the currency that came back. The handling of demonetization and the restoration of currency in the system in the aftermath pretty much dominated Urjit Patel's first Malthus year in office. Of course, now we know that 99% of the demonetized currency did come back. So in the midst of all this began his second important event for his career, and that is the fight against bad loans. And several seminal steps were taken. For instance, in the April of 2017, RBI issued a notification directing banks that if there was more than a 15% difference in their assessment of bad loans versus that of the regulator, that divergence must be disclosed, ending the practice of managing of bad loans by banks. In June of that year, the RBI, for the first time in its history, recognized 12 large defaulters that constituted 25% of the system-wide NPAs and forced banks to send them to NCLT for insolvency proceedings. Now, this was followed by a second list of defaulters, 28 defaulters issued in August, but the most severe blow yet came to defaulters in February of this year, when the RBI issued what is now popularly called the Feb 12 circular. And in the face of staunch criticism by corporates and bankers alike and tremendous pressure to yield from the government, the RBI stood its ground. And even as RBI was facing flack for this Feb 12 circular, one of the largest scams in the history of banking was unearthed at the Punjab National Bank, leading to a bitter face-off between the finance minister and the RBI governor. Now, while the FM blamed the regulator for not being held accountable, Urjit Patel hit back at the government's criticism by pointing to dual regulation in public sector banks, where government interference meant RBI did not have complete powers of regulation. In June this year came another landmark event where RBI for the first time proposed the setting up of a public credit registry to remove the information asymmetry and strengthen the credit culture, which of course for now remains a work in progress. And close on the heels of Urjit Patel's 2 years as RBI governor, now comes the Allahabad High Court order which upheld RBI's 12th circular, once again reasserting their independence. And a quick look now at the rate trajectory under Urjit Patel. Now repo rates were first cut twice and then hiked twice, and they're back now at 6.5% levels. As for inflation, which is the primary mandate of RBI, from a low of 1.46% seen in June of 2017 to a high of 5.2% seen in December of 2017, inflation rates still remain marginally higher than RBI's medium-term target. So the key takeaway from Urjit Patel's 2 years as RBI governor, if demonetization led critics to question RBI's autonomy, its tough stance against bad loans has reaffirmed RBI and Urjit Patel's independence.
Okay, let's get back to the markets then. The mid-caps continue to bleed, so still down close to about 1.25%, even as the benchmark indices are holding flat. Let's get you some more market opinion then. Arvind Sang of Geosphere Capital Management says the market has had a great move in the current quarter so far. Here are his views and the macro headwinds that we face.
Markets really had a great move after this quarter. So I think some of the good news in the stock, but we would be buyers of selective sectors, right? We've liked for a while, things like infrastructure. That spending is going to continue. We like some of the sectors we've liked for a while, like cement. We also like things that have not moved much, like the hotel industry, which is seeing strong fundamental growth. So more on the mid-cap side. We like some of the banks that have lagged. The ICICIs and the Axis banks have come back to life, and that's interesting to us. We are getting more and more intrigued by the real estate sector. Emerging markets currencies, falling like 9 pence. Obviously, the two most extreme examples right now are Turkey and Argentina. But all of that it does create headwinds for the Indian rupee. So I don't think that we can say that just because it's got to 71. All the bad news is priced in everything is hunky-dory, because it depends on both global fund flows and to the extent that they are being negatively kind of impacted in terms of emerging market contagion fears. Oil is going to continue to climb because Iranian curtailment of exports is just beginning, and as that continues to build, there's a risk that oil could get to $85. It got to $80, about a month ago, and then pulled back quite a bit. And if it gets back to, it's already almost back to those levels. And if it continues to climb, then the current account deficit challenge.
Chart crude oil prices, which have continued to surge yet again today. We are trading at a 2-month highs with nearly a percentage point of gain now coming in for the US crude and the Brent prices, which were slightly under pressure as we began the day, as on reports that India and China will continue to import Iran crude if Tehran can arrange and ensure the cargo. But that also seems to have turned in the positive at this point in time, and very bullish reports coming in from international banks and agencies on how bullish they are on crude oil prices, not just for this year, but for 2019 as well. Sumit Bagadia now joins us with his sense on what he expects in the Indian prices, because remember, it's not just the crude oil prices globally. The Indian prices the Indian rupee rather has been very volatile as well, and you have to take that into consideration. Sumit, hi, we have seen some bit of a profit taking is what we began the crude oil prices in India with, but where we stand right now, what's your sense? Are you buying at these current levels?
Hi, Manisha. Good afternoon. Well, as far as view on crude is concerned, in last 7 to 8 days time horizon, we have seen a good upside move in crude prices, and from the 4,500 levels, we have seen a move till 5,000 levels. Now, immediately, a small resistance is placed at around 50-30, 50-40 levels. Once 50-30, 50-40 is taken away, then there is a possibility that we might see extended move till 51-50, 51 60 levels. So I think till that time supports are not taken away, it's better to be on buy side. 49.90 should be the stop loss for long positions for the upside target of 5100, 5150 levels in next couple of days.
Fair point. Also, the strength in US dollar, which is back at a one-week highs, with the US-Canada negotiations yet to yield result. The US-China trade war seems to be escalating as we close towards Friday. What is the reaction that you've seen all of that on the metals as a sector, and is there any buy opportunity that you see at these current levels?
Base metals are showing some signs of weakness. Most of the base metals are trading in red at present. I think immediately there is a possibility that we might see some correction from present levels. We have selected aluminum as a commodity to trade in. We can see a fall in prices by around 4 to 5 rupees. That means on downside there is a possibility that we might see 145 levels. For a trading perspective, one can initiate sell positions in aluminum September at around 149, 150 levels, with a stop loss to be placed at 151 levels on higher side, for the downside target of 146 and 145 levels.
Before we let you go, how are you looking at the precious metals as a sector? Because gold prices are holding around that 30,000 mark even now. How is it looking on charts?
Yes, you are absolutely right. Gold prices are holding. There is a possibility that we might see some upside move in gold till 3,300 or 3,400 levels. So I think for a trading perspective, one can initiate long positions in gold at the current market price, that is 3,200 levels or 3,150 levels, with a small stop loss to be placed at 3,100 levels. Downside it has support at around 30,000 or 30,050 levels also. So to be very precise, for a positional trade, till the time these levels are not taken away, it's better to be on buy side. And on high side, we can see levels of around 3,400 as the immediate target.
Okay, all right. Thanks so much for that, Manisha, as well as Sumit. Well, before we wrap up on the show, just keep an eye out on Bajaj Finance. We're just telling you about the large trade that took place. Take a look at the intraday chart. The stock has taken off after that large trade of close to around 30 lakh shares that just changed hands in the last 20 minutes odd. The large trade actually should come up for you. Two large trades took place, one of around 15 lakh and one of around 13.8 lakhs. And after that, the stock has just taken off, as the intraday chart does tell you the picture. Well,